Well, praise the Lord, hallelujah, and thank you, Jesus, around that time, right here on KAZ Radio, where we have probably one of the most hottest and one of the most longest standing shows, none other than What's Going On with Lady D and the Anomaly, Sir John. Take it away, Lady D.
All right, it's a wonderful Sunday afternoon, and we are so honored to be blessed to be alive today. How about that?
Amen.
Okay, because we did not have to wake up. So thank you, Lord. Thank you, thank you, thank you. All right, without further ado, we're going to get the show on the road because we got a lot to talk about. We have a special guest in the house, Mr. Antonio Tone Robinson. He is here with us, and Tone is back with another book.
I am.
Of the official playbook, 9 Rules for Guaranteed Real Estate Success. This young man has over 15 years in the banking industry and a wealth of knowledge. Welcome to our show.
Well, thank you. Thank you for having me. That's a great introduction. I don't know if I'm going to live up to that, but hopefully I can live up to that.
Oh, sure you can. So, Mr. Robinson, tell our audience, who is Tone Robinson?
Tell them again.
Tell them again.
Tell them again.
Thank you for having me back. I will say that first.
Okay.
I appreciate you guys having me on the first time, and it was a great platform to discuss what we had going on then. So we've got a lot of new things going on right now. Awesome. You asked who I am, I guess, to get your audience up to speed. I'm a local Clevelander, so I'm from Cleveland, Ohio, born, raised, and educated here. And, I worked in banking, like you mentioned, for about 15 years. And for the last 8 years, I've been a full-time entrepreneur. So I run 2 companies, DTS Property Management and my consulting firm, which is Tony Robinson Consulting.
Excellent, excellent, excellent. And so now, may I ask, I know you've got the 15 years in banking experience. What exactly did that cover, Yeah, because that's a lot of ground, when you say you've been in banking for 15 years. I know I've been there for 15 years myself.
Okay, awesome. So for me, I started really out of college. I was just really looking for a job at the time to pay some bills and stay enrolled more than anything else. I went to a private school, so it was very expensive. And so really I started in banking part-time doing telemarketing. That's a job I know a lot of folks have had over the years. Most people keep it for about 2 or 3 months. I did it for 2 years. So I guess I was a glutton for punishment, but it helped me hone my phone skills.
Okay.
So I'll take it for what it's worth. So really I moved from part-time to full-time, had a lot of different experiences, mostly in entry-level customer service, collections, and then I had an opportunity to move into credit.
Okay.
And so really that was really one of my most fun jobs I still have had to this day, is working as a credit analyst. And so that gave me a great opportunity to work with people's finances one-on-one. So I was looking at credit pretty much every day, all day, 40 hours a week.
Right.
And so according to Malcolm Gladwell, I got my 10,000 hours in.
Excellent. So now, and then you moved on to be an entrepreneur.
Well, not yet. I moved into management.
Okay.
After that, and had an opportunity to manage people and see the banking from a different perspective. When you're in management, you're really trying to push down some of the policies, procedures, and things like that, and you're looking at credit and you're looking at ways to make everything work within your branch or within your operations. And so, really moving from that, and then I had an opportunity to do mortgages for about 5 or 6 years.
Okay.
I ran Geauga County for one of the local banks here, and it was a great opportunity to, again, work with people one-on-one in a different capacity, this time really looking at their housing needs. Mm-hmm. And so one of the things that was really challenging is, a lot of people that came into the bank were not ready to buy. They needed 3 to 6 months seasoning to work on their credit, get their down payment together, different things like that. And a lot of times they just needed coaching. And they needed some direction. And so I was able to give them some experience at that time, but really I'm doing a lot more now.
Okay. So tell us about the lot more. Oh, go ahead, John.
Yeah, the last time you were here, your first book.
Yes, sir.
What's the difference between the first book and the second book, just to jump in?
Good question. So, if you recall, the cover was a little different. So we got a redesigned cover.
That's nice.
That came out on this copy. we went into expanded a lot more topics, went into some detail. For example, people were asking questions about how do you put together a great team and then make sure you insure that team.
Right.
So I went into some more detail about insurance products and ways to insure your business, and really make sure that you have a full exit strategy for your real estate business. If you're going to look at real estate full time, you want to make sure that you have an exit strategy. Every good business has an exit strategy.
Right. All right. So it's just all around filling in the details.
More content. Definitely, I think it was a little short. To be quite frank, I probably rushed it a little bit.
Well, you did say it was simple, remember?
And it was an easy read.
And it was an easy
It's still
read
very easy read.
and make you understand some big concepts.
Well, we did. We still did that. It's still an easy read. Right now, we're about 82 pages. So it's still a very easy read, but it's very in-depth. It's very impactful, and really want readers to get some good information out of the book and really be able to take something home and
Right.
apply it more
Nuts
than
and
anything
bolts.
else. Absolutely.
Awesome, because I had a chance to kind of breeze through your book this morning,
Mm-hmm.
and I love it because you actually put in sample letters,
Oh, yeah. Oh,
which
yeah.
is very important. What should you do when you your credit, say what was that I want to use? You've had a hardship,
Sure.
okay, and you had to default on making your payments.
Sure.
A modification, you mean?
No, just
even
not necessarily,
overall.
just
Just
overall,
overall.
and how to go about doing some things yourself versus always having to reach out to a consolidation company.
Well, I'm glad you mentioned that. Really, the consolidation company, most people aren't aware, really hurts your credit just as much as almost as much as bankruptcy.
Exactly.
And people don't understand that. And so, aside from the consolidation companies, a lot of people, credit's a hot topic right now. So I'm glad you brought that up. A lot of people are using some of the financial services companies to pay for and to fix their credit. And that's really not necessary. In my opinion, I think a lot of those companies are being predatory on our folks. And there's a lot of things you can do on your own with a little bit of guidance.
Right.
And so my book is an introduction to that. We provide some sample credit letters where you can dispute things on your own. You really just have to sign your name and put your name and address on it, and it applies to your situation. So we really are helping folks, and that's one of the reasons we wanted to try and do that, is help folks be empowered for themselves.
And that's awesome because a lot of people think they have to do those companies.
Those programs,
Those
they're paying
programs,
monthly, they're
and you're
paying upfront,
monthly,
sure.
And a lot of times they don't understand because we talk to a lot of people, and a lot of times, or King is telling them and saying, you don't have to do that. There's a different opportunity because actually financial institutions a lot of times are willing to communicate. They have the same programs in-house.
They
which
do.
are free a lot
They
of times,
do.
so you
They
don't have to do
do.
the fees.
The
And they're
major-
willing to negotiate.
That's true. That's true. So again, like anything else, information is
the
important,
key.
and
It's the
so
power.
a lot of those companies are selling information,
Right.
which is free. It's available. We live in an information age, so you've got the internet, you've got different resources like this book that
Absolutely.
provide you an opportunity to not have to pay monthly to quote unquote fix your credit. Really,
That's
what
awesome. That is awesome.
Thank you. I appreciate that. Really what you see more than anything else is, and this is the big challenge. When you're paying to fix your credit, you're paying for a point in time.
Right.
Credit
Fluctuate.
fluctuates and it flows with you. And so unless you're really working on your habits, your credit won't change. You'll be 700 or 750 for a short period of time because you paid for the service. And then 6 to 12 months later, you'll be right back into the 500s and 600s because your habits haven't changed. Only you've been paying.
Right.
And so really, again, the book is really an introduction to have that conversation, to let people know there are different avenues other than just paying.
Right. And that's so important that you brought that up because in the line of business that we are in today, I handle a lot of different type of accounts, secure, unsecure. And what I find is that they take these loans and they may pay off their debts, but then they turn right back around
use the credit cards
and use
again.
it all up again.
Well,
Habits.
life,
And,
And,
well,
habits.
absolutely. I mean, but life happens to all of us. If you have kids, if you have family members, if you're the primary breadwinner for your household, unexpected things and expenses always come up.
Right,
And
right.
so, like you mentioned, it starts with habits, and part of those are savings habits. So, if you can put, a little bit aside every paycheck, doesn't have to be 5 or 10 or 20%, just $20 here and there.
Yes.
And that gives you an opportunity to have an emergency savings fund for yourself. So when those unexpected things do happen, you don't have to turn to credit cards. You can look at your own personal accounts first. You
Right.
can finance yourself first.
Right. And also having a priority of what's most needed
Sure.
versus what you want.
right.
We all like to
Because
have a
we
good
all
time.
want-
We
we all
all
want
like to have a
things.
good time. Sure.
Right,
Sure.
you know.
Making things a priority.
Yes. But then also you have to, but that's something that needs to be taught at an early age. Would you say?
That is, I'm glad you said that. That is really one of the most critical things you've said. And really, it's an important part for my book because financial education for every other demographic besides ours is taught at the kitchen table.
Yes.
And so a lot of those other communities are having conversations about building businesses, creating and transferring wealth, savings, debt, things of that nature. And so we are introduced, and more times than not, into credit after we already have the account or after we've already defaulted.
Right.
Exactly. And so really, it just boils down to making smart decisions based on habits. And those habits are not taught. Unfortunately, there are, it's one thing it's funny you say, because we talked about education a little earlier. You can go to school and finish high school.
Right.
You can go to college and get a great major and get a degree and still not know how to balance your checkbook.
True.
Yep.
Still not know how to read your credit report. Still not know how to file your taxes. So I think it starts with the education that we have, not only for as a grand scheme, but also at home, at the kitchen table. So it starts by having some of these detailed conversations at home with our kids. Recently I put a post on one of my social pages. It says, what are we going to do about our kids and their debt level? And so the answer is real estate. The one thing that you can guarantee is real estate. It has consistent returns over time. Not only do you get the tangible asset itself, but you get the appreciating returns. So that's something I think is really important to put out.
And I don't think it takes a rocket scientist to, it looks like a whole lot. Because it is. Because
Sure.
you have to understand the different terms.
There's a lot of moving
and,
parts in every real estate transaction.
Right.
Mhm.
And let's talk about when someone has filed bankruptcy and they start over again and they want to purchase property.
So that's a good question. Really, a lot of folks have life experiences, like we mentioned, and you find yourself in a situation where things are too much and you are needing help or a restart. And if that's the case, there's nothing wrong with that.
Right.
It's important to understand there are differences between Chapter 13 and Chapter 7. And so a lot of times the attorneys will kind of lead you down the path of repaying some of the debt that you've accumulated over time when you also have the opportunity to walk away from that debt. So it's important to understand that there are differences in the bankruptcy process before you even get away from the bankruptcy. Once your bankruptcy is discharged, and that's just kind of the finalization process of the bankruptcy, you really have a fresh start. No matter your age, no matter your income, no matter your job, you have a fresh start. And that's a great opportunity to reset, start over again,
Right.
and really understand some credit principles. Because if you're going to be looking at real estate after a foreclosure, most financial institutions are going to look at 2 years as a minimum before you're able to handle any real estate again.
Right.
Some lenders look at 4 years. So it depends on how you're able to reestablish your credit over the, after your bankruptcy.
Okay. And so when we talk about lenders, so like I know they have programs. Let's talk about a personal mortgage lender versus your bank after you've done that.
So there are a ton of lenders out there, and obviously every lender has different requirements. Underwriters are different. at your traditional banks than what you'll see at your mortgage companies, so to speak. And so the primary differences, without getting too technical,
Right.
is most of your traditional banks like your PNC, Fifth Third, Huntington, they're national banks. They get their money from the Fed.
Okay.
So you're going to probably have the lowest rates on the market with those traditional lenders.
Okay.
Lowest fees, lowest costs. The one drawback is you also have restrictions because you
Yep.
absolutely. So the most traditional banks look at HUD, or Department of Housing and Urban Development, HUD and Fannie Mae guidelines. Probably 85% of most mortgages written today are written with either HUD or Fannie Mae backing. So you're going to have some restrictions, but you'll have the lowest rates and lowest costs. Now, if you're a person that's had some challenges or you had a credit reset, a mortgage company could be a great avenue for you. A couple things to keep in mind: you got to understand the fee structure. The fees are definitely higher when you look at a traditional mortgage company versus a bank. Why? Because they don't get their money from the Fed. Their money is basically grouped together by investors, and
okay.
they set their own guidelines and terms.
Okay.
And so you'll pay a little bit higher cost for that loan, just like if you have bad credit and you want to get a car.
Right.
You're going to pay higher rate if you have bad credit. Same thing for the mortgage.
I see.
So those are the major differences between a traditional mortgage company versus a traditional lender.
Let's talk and share with our audience secure and unsecure. Because sometimes I
A
don't
lot of
think
people don't understand.
they
the
don't
difference.
understand the difference of that.
Good point. So if you are someone that is very young, let's say between the ages of 18 and 21, and you want to establish credit, because you are hearing things out there about making sure you have good credit and things of that nature, most of the time when you apply for credit without any history, you're going to be declined.
Right.
Okay.
Okay.
So one of the ways you can start that process for yourself in terms of establishing positive credit is what they call a secured credit card. What does secured mean? It means you put money down, some of your own money.
Okay.
It could be a small amount like $300 or $500, and then the bank will give you a credit limit associated with that deposit.
Okay.
And so that is secured. The credit card is secured with your own money. And then all of the same traditional credit principles apply. You still need to keep your balances low. You still need to pay on time and those things. But the difference is you didn't get it based on your name and your history. You got it based on your deposit. So someone that has a credit reset or someone that's very young could use secured credit to restart their process all over again. You mentioned bankruptcy earlier. That's a great opportunity for someone to come back in and reestablish credit is with the secured account. Unsecured is just the opposite of that, meaning you have some type of history of paying bills on time, and lenders will look at your credit history and your credit profile and determine, we think you're worthy of having some of our money.
Okay. Giving you a second chance.
Well, not even a second chance, just giving you the credit line to begin with.
Okay.
And then it's not based on your deposit or anything. It's strictly based on your credit
Record.
history.
Your previous
credit
history.
Exactly. So those are the major differences between secured and unsecured.
Okay. And now, let's see. Tell me, what are some of the current projects that you're working on now?
We got a lot.
I know that you're so busy. I mean, it takes time to put this information in here, and I'm sure our young people can really benefit from this.
They can.
information. Yeah, anybody of any age, because if you're dealing with money and you got to live, you need to have
Financial
things.
education, financial literacy is the key.
Yes.
That's like any investment, whether it's real estate, stocks and bonds, everything is risky based on the information you have.
Right.
So the more information you have, the more you're empowered to make a decision that's beneficial for yourself. You asked about some of our projects. So last time I came in, I think it was around December, and we were introducing our scholarship program. So now we've went through a cycle of that, and so we had 5 or 6 applicants for our scholarship program, and we're getting ready to announce our first winner
Okay.
in the next week or so. And to my surprise, it's a young lady. It's a young lady. I thought I would get a bunch of male applicants because, I'm a man and we talked about entrepreneurship and things like that. But we got a young lady who is very dynamic.
Okay.
And we'll be announcing all of that very, very soon in the next week or so. But so our scholarship program was really a success this
Talk
first
about
year.
a little bit more of that scholarship program for those who is not aware.
Sure,
Okay.
sure. So I guess the motivation came from looking at social media. Believe it or not, I looked at during the time of Kwanzaa. We were looking at different days of the days of Kwanzaa, the 7 days of Kwanzaa. And so one of those days talks about what are you going to do with your community. And so I said, well, I'm going to start with myself first. And so I wanted to have a positive impact on some of our youth, who I think really have the biggest challenge in the world that we live in.
Right.
The education system is failing them. They say our generation of parents are soft. And so our kids are soft. They don't have work ethic. All the things you hear about our young people. And so I said, you know what, I'm going to start with me.
Okay.
And so I'm going to be the difference that I want to see in the community. And so I came up with the scholarship program as a way to offer young people an opportunity to either further their education or look at entrepreneurship. I mean, let's face it, every kid in high school is not going to go to college.
That's what I always say.
And so, and even for those families, the kids that are college ready or college bound, but their family may not have the finances to send them, some of those kids have to go to work.
Right.
And a lot of them don't want to go to Wendy's or Burger King or McDonald's. They want to do something for themselves. And so the world we live in with the internet and, social media and things like that, allow you an opportunity to be a business owner. It's not glamorous. It's not fun.
It's hard work.
It's a lot more hard than anything I did in banking.
Okay.
But I really wanted to give that opportunity to some young people. And so my scholarship it's a $500 scholarship. It requires a 500-word essay, and that the young person be involved in their community to some degree, and then have some type of extracurricular activity within their school, whether it be a sport or drama, band, things like that.
Right.
So we wanted a young person that was involved, that was engaged, but had a need. And so we are happy to be able to provide some resources to a young person that has a need to further their education.
That's awesome. That is really
And
great.
build up their pipeline.
Yes.
Well, I mean, to me, that's all what college is, or even if you don't go to college, or meeting people, or working in your community. It's about networking.
Sure.
It's building a
Absolutely.
pipeline. And if you want to be an entrepreneur and you know that already, then building your brand.
Building your brand. That's it. That's the biggest key. I mean, when you're a business owner, most business owners work their business and don't have an opportunity to kind of direct and lead the business in different directions. And that's where the networking and your network comes in, because you have an opportunity to partner up and do different things with different business owners and different entities. So it certainly does make a difference. Absolutely.
One helping the other.
Yeah.
Absolutely. I mean, that's really the collective that we really need to have in our community is helping each other out. The other communities do this every day. Even when you look at the dollar, how the dollar circulates in each community compared to ours.
Ours circulate out.
100%.
We're the biggest spenders.
That's correct.
We keep the economy alive.
Absolutely. So 70% of the American economy is built on spending.
Yeah.
And so if one particular demographic spends more than everybody else,
Between 80 and 100% more.
absolutely. And that's a big thing when it comes to wealth creation, because there is no wealth when every dollar you have that comes in goes right back out. And the other key point, it doesn't go out to our community.
Yeah.
It goes out to every community but ours. So it's important to, shop with your own community. And so, Black authors, Black businesses, it's important that we support each other.
Yeah.
Absolutely.
Yeah. I really try to support our Black businesses, and because it's important.
Absolutely.
Our kids need to learn how to support Black business.
Absolutely.
And because they give their money so freely. I mean,
Well,
they give it
it's
away
indoctrinated
like
in
it's
us.
just, I know.
indoctrinated.
It's
Well, I mean, in the past, you kind of think about it when, You talk about, for instance, out there in Tulsa, Black Wall Street. We did have that concept. We had it in a lot of our southern towns because segregation pretty much forced it.
Right.
Sure.
So we did have that concept. But then when we became more and more a driving force on the other end, as in savers, and innovators, you got to think about it. During when our industrial revolution was really, really taking off and a lot of innovation was happening, a lot of that innovation came from Afro-Americans.
Absolutely.
And that's something that's really not taught in school. The first computer really started with an African-American, here in Cleveland, street lamps,
Garrett Morgan.
Afro-American, you have the lady became one of the greatest first female millionaires. Think about it. In the capitalist age.
Right.
It was a black woman.
Right.
Shout out to black women starting businesses. Shout out to our sisters out there doing their thing.
And they're doing that now.
Yeah.
So I think
now.
we're doing a full circle, but you're right. We have to continue hit on the message and go back because we're in a very competitive world. The world is getting smaller.
Absolutely.
It's already been a small world. It's the third smallest in the solar system. So it ain't that all that big.
And it could be flat if you ask some certain people.
Certain people. So it's getting smaller. Nice dick. Larry? No, okay.
The anomaly is drawing you in. Come on, Larry.
Oh, shoot, I don't have my mic on.
Oh, okay. Yeah.
Just again, some people think it's flat, like you're 45.
No, the earth isn't flat, John.
Okay. Good deal.
But it's getting smarter,
Sure.
and the competition is getting more and more stronger because you got a lot of countries. I've been really reading papers like from Kenya, South Africa, Ghana, Uganda, and I'm like, wow, I didn't like in Uganda. I didn't know a lot of stuff was going on. That Uganda's it's a sleeper, my people, but it's a
burgeoning economy.
It's a lot of industries popping, and it's all been
Right.
led by the people there.
Well, primarily because of the internet.
Exactly.
It's like you said, it's a global economy now. Akon, the music artist, is doing some amazing things with industry, with energy, and over in Africa, with lighting and things of that nature. So it's in really undeveloped land. So that's probably where you're going to see your next big revolution of spending and entrepreneurship come from, is the native
I
land.
really think that it's
Hopefully.
Well,
it's a lot of
I have to disagree.
they showed the hot spots.
I have to disagree.
Okay.
The biggest area of I hate to use the word spending because it's a terrible word, but investing is going to be cryptocurrency. Trust me in that. Trust me in that.
I agree with that.
Cryptocurrency
is big in Africa.
I know exactly what I'm saying.
They're actually the one leading it.
Because it's very beneficial. But the more I read on it, the more I study on it, and the more I invest in it,
Me too.
Cryptocurrency is hands down going to be the next big thing next to what the internet brought to
It's going to be the
the
world
tech
changer in
tech.
economy.
Yeah.
It definitely is.
Well,
People are going to be buying houses with Bitcoin, Tone.
I agree, and like you mentioned, the more information you get,
Right.
the more you study, and the more you invest, the more you find out.
Right.
And that kind of touches back to what we were saying earlier, whether it be real estate or stocks and bonds or cryptocurrency. Everything is risky
Yes.
if you don't have the information, right?
Yes.
So it's important to arm
or
yourself.
if you don't have the knowledge.
Well,
of
that's what I
you're
mean.
doing.
Yeah, it's important to arm yourself with that knowledge so that that the information becomes less risky, less demystified, so to speak, because you understand the industry jargon, you understand the terminology, you understand the financial ratios and things of that nature.
Chapter 7.
Yes, sir.
Sort of what you're leading to, right there. Debt leverage. How to leverage your debt.
How to leverage your debt.
Yeah, debt leveraging.
That's one of the chapters in the book. I'm glad you mentioned that. Debt leveraging really. We leverage our debt every day of our life. How much do you have in your pocket? How much do you need for lunch today? How much gas do you need today?
Right.
So we leverage our debt every day. It's a fancy way of saying just managing your money. When it comes to real estate, leveraging your debt could be you have a little bit of credit, your credit's okay, and you have a little bit of cash. A lot of people think it takes a lot of money to get involved in real estate. It really doesn't. It really doesn't. If you have, right now, traditional lenders are looking at a minimum of 620 credit score.
Okay.
620. It's not very, you don't have to be blowing the world away, just making your minimum payments on time to get to 620. So 620, excuse me, as a minimum credit score, and about $3,000. That'll get you in the game.
Wow.
What kind of game, though, Tony?
Well,
I mean,
Real estate game.
Well, let's talk
no,
about.
no, I mean,
that's a great question. So
because
let's.
I would rather be an investor than buy a house and live in it. It just
Exactly.
doesn't make sense to me.
Well, that's a good point. So that's the Robert Kiyosaki model, the 4 quadrants, right?
Right,
So
4 quadrants, yes.
real estate is not an asset,
Right.
unless you have something else to pay for it.
Exactly.
Right. So
Exactly.
that's a good point. So keep in mind, when you talk about wealth creation or wealth building, there's pretty much 4 basic tenets.
Okay.
Home ownership is one of them. So if you don't own where you live, you're giving away one of your basic principles of wealth. So if you look at most of our people in, let's just say, Cuyahoga County, where we are now, most of our folks are renters. Okay. So what we're doing is giving away. We're shopping. We're not owners. We're shopping. We're giving away that money. We talked about how black folks have 1.7 trillion dollars of spending power, but we're just giving it all away. Renting is the same thing. You're giving your money away. Your landlord and his family, thank you. Okay, so
Okay, but when I move out of that house, now the landlord, and I own my own house, but the landlord now has to find someone to put into that house, or he has to now pay that debt.
that's correct. So
and trusting in one family house is just, to me, it just seems, because I had it and I got sick of it. I just got sick. If anything, give me an apartment building where I got enough
Sure.
people
Lot of it.
paying rent.
Sure.
So if one or two move, it's still being paid.
Well, you're right, and so
But wouldn't you say you have to build yourself up to that, or would you just
That's a
wanna
good point.
jump right into
Well, that's a good
doing
point.
that?
So there's we're having really 2 different conversations
Okay,
here.
go
So
ahead.
if I can unpack this just a little
Yeah,
bit.
go
Okay,
ahead.
okay.
Good.
So when we talk about getting into the business or into the game of real estate, okay, we're really talking about the entry level for most folks, right? Okay, so most folks aren't coming in as investors. Most folks are coming in to own their home, to own where they live,
Okay.
so that they don't have to pay rent every month. To
Okay.
be quite honest, you can own for less than you're paying for rent.
Okay.
Okay, so all of our folks who are single parents, tax time is coming up. Everybody, the majority of us that get a tax return, I'm not one of them.
Yeah, me either.
Most of our folks who get a tax return, that money is gone within 3 months.
Right.
Okay, so you're still renting, you have no assets, and the money the lump sum of cash or capital that you're getting into your home, you're spending right back out again with no ownership of anything. Okay, so the first part of it is the folks just getting into the business to be homeowners. So if you're getting in to be a homeowner, the 620 credit with $3,000, that'll get you in the game. That's just enough to be a homeowner, to put your down payment in, and now you have your own piece of the American dream, let's call it.
Okay.
Investors,
What kind of house do I get for that $3,000? Was that considered 10%, 20%?
that is 3.5%.
Oh, that's just 3.5.
3.5. So FHA financing
Right.
allows you to put down a minimum of 3.5%.
Oh, okay.
Most financing today is either done FHA or conventional. And so, again, we're not talking about the affluent folks. We're talking
Okay.
about the folks who really just want to get a start.
Get a start.
Get a start.
Starters.
Get a start. 3% of 100,000 is $3,000. Okay, now that doesn't mean you have to buy a $100,000 house, but
Right.
3,000 gives you enough of a buffer to put your down payment down
Right.
and be able to get into the house. Okay, so let's see, let's take both sides of the city.
Okay.
If you're buying a home and you're an East Sider, that'll get you into a home in Cleveland Heights, Maple Heights, Warrensville, Garfield, Bedford. That'll get you into those working class communities.
Right.
So that's a start. If you're a West Sider, Parma, Lakewood, Tremont, the West Side, the West Park, some of those areas, even Berea. And so that'll get you into a home in those communities. So if you're renting now, very seriously consider how you can just make a small shift to pay less money every month. Everybody wants to save money.
Right.
So if I can show you how to save money without doing very much different in your current monthly budget, most people would take the opportunity.
Right.
Okay, so that's just the initial homeowner. Investors, you obviously need a little bit more. Okay. Banks are going to typically require you to put down 20% because you don't own the house. It's a quote unquote business for you. So you're going to have to put down a little bit more. They want to see that you have more skin in the game. Okay, so you're going to need a little bit more capital. You're going to need a little bit better credit. Why? Because again, it's not your primary home where you live. So the bank believes or thinks that if things go haywire, you're going to leave that business, that investment property. You're going to leave that property first before you leave your primary home. So $3,000 in 620 credit doesn't get you into the investment world, but it'll get you into the home ownership arena as a minimum.
Excellent. So let's talk about, because I know people are buying homes and fixing it up, as you would call it, flip a house.
Great market for that right now.
Because there's so many homes out here, you know, because of what happened. What has it been, over 10 years?
08.
Yeah, you know, over 10 years ago.
And my friend Larry might be one of those people that was invested in 08.
No, were you?
No. Actually, no. I've just had headaches.
Okay.
Headaches with the tenants
Yes.
and the day-to-day.
So Larry, you are my perfect client.
Okay, talk to me.
Let me tell you why. You're a professional, and you've been a homeowner before and an investor before. Were you managing the property on your own? Did you deal with your tenants on your own?
Yes, and to my demise, my son is a property manager.
Okay.
Good.
And I should have had dealt with him.
Yes, sir. That's where I was going.
Go ahead.
So most of the, let's say, experienced investors, they don't try to manage the property themselves. It's important to have someone that is a buffer between you as the owner and you as the investor or in between the tenants. So, for example, if you're the one taking all the phone calls, those leaky faucets, the heat goes out, you need the grass cut, the gutters need to be cleaned, you're taking all those phone calls. When you have a regular job or a regular business, you have a family, you have kids, it's a nightmare.
Yeah.
It's a nightmare. And so most professional investors or experienced investors have a property manager. Why? Because they have one neck to choke and one check to collect. That makes sense?
Makes a
So
lot of sense.
a property manager is the way to go if you want to get into the business of real estate full time or into the business as an investor. I always suggest using a property manager. Absolutely.
Because then now you become more like the investor.
You
because
become an owner.
You're
you're
freeing up your
owner.
time, you know.
What
you
you're-
can be focused on doing some other things.
That's the point. So if you're so just like as a business owner, I work my business, right?
Right.
So I need to make sure that I spend some time managing the business for upward vertical trajectory, right?
Right.
So, but if I'm always working the business, I won't have time for that. Same thing if you're a landlord. If you're the one taking the phone calls and dealing with running back and forth, trying to collect rent and things like that, you're working the business. You won't have time to go look for more property. So that's when real estate becomes a headache.
Excellent advice.
Thank you.
Great. So there is money to be made, and there is ways of learning how to use money. Because money
Absolutely.
is good if you're good to money.
That's right.
Yeah.
Money's
Money's
like
not
a
the
woman.
problem.
Money got
like
a
a woman.
personality.
Well, money's a
That's right.
tool. It's no
It's
no
a tool.
different than
It's a tool. And what were you getting ready to say?
Money is like a female.
Okay, I'm interested. Hold on. Come on now.
Okay.
Tell me.
All you guys don't know if you have wives or not, but you can contest that you're a female.
Yes.
A female wants to feel love.
That's right.
Okay. A female wants to be treated exquisitely well.
Yes.
Oh, how you gonna treat
All right. No.
No, listen.
See. What comes
Unpack
out
it
your
for
mouth?
us.
unpack it.
When you speak about money is like present. It's almost like an energy.
Mm-hmm.
Okay. And if you speak bad about money,
It
money ain't gonna want to be around you.
It sure will.
Money don't want to come around you. See
Sister.
how you looking? See
It's
how
a
you
self-fulfilling prophecy.
see how he look?
Yes.
See,
Only-
you don't roll your eyes at money. You
Because
say
now money just said, oh no.
no, well he don't want nothing to do with me.
No, and I
it's
need
no different
no,
than a
it's
no,
no,
hammer
but
or
also
my car.
brother.
or my
brother.
roller
You
skates.
got some learning
Bro,
to
The
do.
yeah.
energy is the person or people.
Money.
Now, let me tell you something.
Has
Money
a
talks.
personality. That's right. And
Money
it talks.
talks.
You know what? Money
It's
would talk if
action.
it was a pack of cigarettes. If I was in the Philippines, I could buy more with a pack of
So you're
cigarettes
looking
than
at it
$1.
as a trading
That
value.
is money.
You're looking at money
But
as
that's
a trading
money.
value.
That's money.
I'm gonna ask you to go to the
gotta-
Bible. I'm gonna ask you to go to the Bible, and I found something very profound as a pastor in the Bible.
What?
God said, "You can't serve." Now He's comparing Himself. He's comparing Himself. He says, "You can't serve
Right.
the devil and me." He says, "You
Can't
can't
serve two masters.
two masters.
Right.
Either you're gonna hate the one or you're gonna love
love
the
the
other.
other.
You're gonna hold on to the one or you're
to
gonna
the other.
despise the
And
other.
what-
You
hold on,
can't
what-
serve. Listen. You
Listen.
can't serve mammon or money and God. Now watch this. Now watch this.
Exactly.
Now watch this. Money has its proper place in your life.
It has its
Money
proper place.
Is
That's
to
a
serve
tool.
you. But if you don't treat
To
her
serve
right,
me.
if you don't treat her right, she not gonna serve you.
That's
Let
right.
Let me tell you where I think he's going with it.
I
Let me tell you where I think he's
Now,
going with it.
come on,
Come on,
Tony.
Tony.
Come on,
Come on,
Tony.
Tony.
Tell him,
Let me
Tony.
tell you where I
Help
think
me,
he's going with it.
Listen
Money
to
is
this.
a tool. I agree with you there. I do agree with that.
You gotta treat
Yeah.
your tools right.
You good?
I agree.
However, the way you're thinking about money is
Yes.
as if you're working for money.
Yes.
When money works for you,
Oh, I know
Exactly.
that.
it's
Just
different.
like your tools work for you.
Your tools can't work without somebody
Come on.
without somebody physically doing it.
So is money.
No.
You gotta put it in the right place for it to keep on running.
Listen, anomaly.
Anomaly. Good
You gotta
word.
put it in the right place for
Your
it to
tool,
make money
your,
for you.
if you have tools in your toolkit and you're doing construction, you got a tool belt on, right?
Yeah.
You got your hammer, and everything else, right? Okay, those tools don't work without somebody picking it up first.
Yeah.
Okay, you don't make money unless you go to work first, right? Because if you work for money, if the money is working for you, you don't need your tools.
Right, you
The
put it
tool-
in the right
No.
place.
You didn't do
No,
anything
you're doing
to
it
it.
this right.
You didn't do anything to it.
You had to do something to it.
No,
You
no,
had
no.
to work for it to get it.
That's
No.
only no. That's
You don't.
that's the
Listen to
point.
the concept.
All right. Hold on. So you saying
Don't
hold
work
on.
for money, John.
So you
You
say
got money,
you
work
say
for
hold
you.
on. Let me get it. So you're saying is
We're getting lively here today,
I come out
folks.
with nothing. My parents are never rich. I come out with nothing. I'm gonna sit on it and say I love money. It'll show up
Okay, let me show you how. Okay, let me explain to you. This is really
like
simple.
a
Let me explain
lucky
this.
charm underneath
Okay,
the tree.
let me make it
I
simple.
want to hear this one.
Let me explain. Okay, wait. I started KAZ with no money.
How old were you? How old were you?
Let me tell you. It was a thought
There you go.
in my mind.
That's it.
Wait a minute.
That's it.
Wait a minute. Wait.
That's it.
Let me
But
finish.
everything is a thought.
No,
Starts
John,
out
John,
as
you're
a
missing.
thought.
You're not.
No, you're
Check
not
this out.
listening.
John, you're not
Let it-
listening.
let it-
Everything is a thought. I'm getting what you're saying. Everything is a thought. We're all thoughts.
My business is a thought,
Exactly.
but
Every human
until I
being
wrote this
is a
book,
thought.
I wasn't on this
I
platform.
know. See, y'all not seeing what I'm saying. The universe was created with what? A thought.
Right.
I got where you're going.
Okay.
Everything is a thought.
It's a thought,
Everything
and then it
is a
becomes
thought.
an
Every
action.
Sarge says your chair is not really don't look like this chair. In reality, God's reality is a bunch of what?
John, you're getting too deep. Let me kind of finish my statement.
Please,
Finish your
Thank you,
story,
guys.
yeah.
please.
So I get what
Okay.
I started, and I love the word platform. This was a thought, and guess what? Money had nothing to do with this. Money had nothing to do with this. I'm gonna prove it to you.
you don't have to prove it to me.
No. Let's hear
Let him
the
finish.
story.
Let him finish.
Let me
So
finish.
it was a thought. I wanted to be a broadcaster. I wanted to have something different. I wanted to do inspiration. I wanted to give information to people. I wanted to stream all over the world. This is what I wanted. Guess
And God
what?
provided.
Once I began to think along those lines, people like Lady D showed up. People like Tone showed up. People like Lady Gilmore in this show and that show. 99% of my shows, I've never went to go get them. They all came to me. And guess what they brought with them? Money. Money. So I didn't work for it. I didn't even think of. Matter of fact, I
You
started
did
this.
think about
No,
it.
let me finish.
You
No,
thought. You had a thought.
No, not about money.
No,
about
but what you
providing
want.
a service.
Providing a service.
Value.
That value. And the more value I bring,
The
the
more
more
money
money
comes.
comes.
Yes.
So here's my thought, John. I'm just trying to show you.
Your
Just
thought
like
is
we
in
were
line
talking
with
about
who?
yesterday.
Seek first
got
the
to-
kingdom of God.
Yes.
and all else will
And
come
be
to the
added.
point.
So when you talk about money in
I'm
a
talking
way
about it as a tool,
that-
a talent
but
to be
that-
used.
John,
You're missing it.
listen.
I'm
listen.
not missing it because I think
John-
about Christ and he said the kingdom of God. That's all I have to do. All I have to do is have
Okay.
a thought. If it's in line with Christ, it will all come.
That's my
simple.
point.
So
That's my
here's one
point.
question for you. I got one question.
Okay, go ahead.
How's it worked out for you so far?
Perfect.
Okay. You're happy with your lot in life.
I'm happy with my life.
Amen.
Amen.
There you go.
I am
There-
very,
there-
very
Amen.
happy with
there you
my
go.
life.
There you go.
Amen.
I didn't even think I'd be alive.
Okay.
Well, that's so important.
But that's our hope. That's my whole point. Is that when you begin to not go after the money, but go after the dream and
Yes.
the imaginations and the
Yes.
things.
I
that-
think we were just saying it
the,
different
the-
ways.
Right.
the
to be
things that
honest
God
with you.
put in you, the money shows up.
Yeah.
The money shows
Right.
up, and when the money shows up, treat it right. That's all I'm saying.
Yes.
Don't dog her out.
You got to woo her a little
Be
bit.
a good
Yes.
steward.
Yes.
Be a good
Yeah.
steward.
You know what I'm saying?
Be a
You
good
know,
steward.
like Tone said, like he just taught me, okay, because I've caught myself making mistakes. The reason I didn't give my son that house, which I should have, is because, man, shoot, I need my money on the first of the month. He couldn't give me my money to the middle of the month. Now I wish I had my money coming in the middle of the month,
Right.
and I wouldn't have had those headaches
That you were
and the
doing.
discouragement that I had with this past tenant. You see what I'm saying? So
Oh,
I saw
I
how
see.
I got out of the wheel of
Right.
what I should have
desire.
done.
Right.
You know, and when we begin to say, okay, I'm buying these houses because I want to provide nice places. That's my first thought.
Yeah.
I want to provide people with a place that I would live in.
There you go.
Yes.
That's why I'm doing. Hey, when I had that thought, I had people that moved into the house that had my kind of thinking.
Right.
I'm gonna take care of it. I'm gonna do this. I'm gonna do that. I'm gonna do this. But when I got frustrated,
And it
I just
happens.
need my money. I want my money.
Right.
Guess
That's
what?
when things
That's
change.
what I got, and things change. That's
Yeah,
my point.
Yeah.
Good point.
So
Good
it all
point.
starts, like you said, it's a thought,
It's like so.
and you
I
know,
thought
and
that
you-
it's aligned if you're a Christian to me.
and
to
it's so
look
important to
Your career.
protect and guard your thinking.
Yes, it is.
Okay.
Talk to us.
Because you're getting bombarded everywhere
Yes.
on your thinking, on your mental acuity.
Especially
so
now.
absolutely.
And it's only going to get
Yes.
more and more
because
so.
all it becomes your life experience.
Mm-hmm.
So you have to be very and this here, that tongue,
Now,
that mouth.
right. To
What
get back
comes
earlier,
out-
I like my life. My wife
Okay.
wants a lot more, so
That's
I have
very
to
important,
align
too.
myself too.
Have your wife come see me, and we'll upgrade
To
both
her.
of y'all. We'll upgrade
To
both of
her.
y'all at the same
Well,
time.
you know what? Now we've covered a lot here, but not really a lot.
Okay.
So how can our listeners go about getting the
Exactly.
offensive, the book?
The book.
How can they get this, and how much is this book? Because I know a
Tax
lot of
time is
people
coming
need
around,
to have this
and
book.
a lot of people should read this book so they
Yes.
can make a more formative with what they're going to get back.
Wake up.
Wake up.
Wake up.
Wake
What
up.
that
Wake
money
up.
Wake
can
up.
do.
Wake 'em
Wake
up.
up.
It's
Wake
time
up.
to wake up, people.
It's time to wake up. So thank you for asking. So this book is available on multiple platforms. It's available on Amazon
Okay.
as an e-reader and as a paperback version. So this is the first allotment, first shipment of the book. So it's available on Amazon. The Offensive Playbook, 9 Rules for Guaranteed Real Estate Success. It's also available on my website at TonyRobinson.com. Tony with an E. TonyRobinson.com. And then, of course, they can reach us on all of our social platforms as well. Tony Robinson Consulting.
Great. And how can someone? Oh, well, you just gave that information out. Give it to them again.
Okay.
So if someone missed that.
TonyRobinson.com. TonyRobinson.com. They can also call us toll free. One thing I do want to mention, we are doing for our folks that come to the website and have questions, and they really want some more personal attention without necessarily paying for it, we do offer a 30-minute free consultation. So if you want to go to the website
Right.
and find out how money can be more than a tool, you can you can go right to
It's
the
like, hey, he's good. He's good. He's good.
you can go right to the website, fill up is 6 or 7 questions you can answer, and then I'll follow back up with you. Somebody from our team will call you and go through the process with you and kind of understand your finances and kind of see where you are and see if there is a match where we can help you.
Okay.
So you can do that all on our website at TonyRobinson.com. And again, they can reach us toll free, 888-928-1555.
Excellent.
All right.
All right. Well, I really enjoyed having you on our show. I want to ask you, are you open to going out speaking engagement, doing speaking
Oh, yeah.
engagements and teaching our youth? Because we need to break
Yeah.
this generation cycle. Because these kids and our young
Well,
adults,
I mean, you
they're
can't
our
always
future.
believe it, but we got to
No,
minimize
but
it.
we can start
And
somewhere.
I think we have been with people like you are taking and standing up. I think we have been. I've seen that in a
But
lot
just
of our
imagine,
millennials.
I still
But we
haven't
gotta
been
do
able to
more.
get it more. Yeah,
Yes.
absolutely. More is the key. So absolutely, I do speaking engagements all over the city. Some things outside the city
Okay.
as well.
Okay.
Absolutely. Whether it's at-risk youth, whether it's building credit, or looking at wealth building platform like real estate,
Okay.
I'm speaking all the time.
Okay.
And so I really want to be able to educate folks to make the right decisions as it relates to real estate. This is just one investment avenue. It's my chosen avenue.
Okay.
So this is where I have the experience, but there's many different avenues to invest. Real estate is just my platform, but I really help people do it the right way. There's involved, like you mentioned before, in every real estate transaction. A lot of folks got their hands out. The realtor, the appraiser, the bank, the contractors, the insurance agent. So there's a lot of people that have their hands out, and if you're inexperienced, oh yeah, title is where you got to start there. If you're inexperienced about the process, you'll end up paying a lot of money to the professionals because you're following their advice. And so my book empowers you to know how to deal with the professionals better. It's all about empowering the reader.
And it's also, to me, just looking at the chapters, good concepts, like you said, there's other platforms for investment. And there seem like good concepts here and foundations that will help you in those other concepts.
Yes.
They can. I mean, debt leveraging is a good business practice, financial business practice for anything. So
What you do every day in life. Anyway,
every day what you do.
expanding it.
Expanded, exactly. So I appreciate you guys having me on. This has been a great platform. It's been informative. It's been a little fun today. We're gonna have to work on John a little bit.
Yes. Absolutely.
I love him. He's just so special.
But he's married, so we know how to get him.
Right.
Go to his wife.
That's right, because Lois is the queen.
Oh, she helps me see things.
Yes.
There you go. That we wouldn't see. That we
Right.
wouldn't help you
I
see.
don't see. I can. It's great Sunday. We had a great show. Can you give our listeners some wisdom on part 5 or?
I can.
A thought for the week.
A thought for the week. In this world that we live in, like we mentioned, there's not only assault on your thinking and an assault on your intelligence, there's an assault on your pocketbook. And if we don't become good financial stewards of our own selves and our own families, the assault's only going to get worse. We don't own very many systems in this world, and so it's important for us to at least have a start with our own resources, being better financial stewards of our own resources. So if you have kids, the one thing I talk about at my seminars, no matter what we're covering, make sure you have insurance outside of your workplace, because all of us are going to die. Mm-hmm. And so I'm sure as a pastor, he sees it probably more so than we do. But folks that don't have life insurance, GoFundMe is not insurance. It's not. And so make sure you take care of your kids with some type of insurance outside of your workplace. If you are looking at putting your kids through college, there's a number of different ways to do it, 529 plans and things like that. And I'm a big advocate for those but also look at real estate as a tangible way to be able to offer you the opportunity to put your kids through college. Really, if you're just not even flipping houses or anything, like that, but if you just get one property, whether it's a single, like Larry doesn't like, or a two-family, $300 to $500 a month extra coming into your home is a great way to fund your kids' college expenses. It's a great way to fund your retirement accounts or your emergency fund that everybody, not many of us have, right? So real estate can be an avenue depending on what your objective is. And the last point, most of my clients don't live in Ohio. Most of my clients are out of state. California, Hawaii, Arizona, Chicago, all over the country. But they're buying right here. They're buying here. And guess what? They're making good money. Not many places across the country you can go find a $20,000 property and get $800-900 a month in rent on that property.
That's right.
Even if you don't know numbers and finance, $200 a month for a mortgage payment and you're getting $900 coming in.
That's right.
It's a big difference.
That's right.
And
Yep.
so those
That's
are
right.
tangible properties that are going on all over the city. Every part of the city, every quadrant of the city is having this going on right now. And of course, everything isn't 20,000.
Right.
But the point is, there are properties here that our people overlook because of the neighborhood or because of the house or because of whatever. That's an uneducated decision. Become smart about what's going on in your economy and your community, and seek resources, whether it's me or someone else, that can help you put some of that to use to better your family situation.
Great. Thank you, Tom,
Great
for
thought.
giving that information.
That's a great thought for the week. Great thought
And
for the
there's your thought for the week. Please check out Tom Robinson' new book. It's out. He's giving the
I'll even look
information. And
too.
we
Oh.
will be back next Sunday. If you're doing
Oh, not this
something.
Sunday.
Oh, that's right. We're moving into a new home. So Sunday after that, we'll be back on live. And if you're doing something great, please give us a call at 216-571-2235. And we are the show and the home of the what?
25-cent advertisement. So
Go ahead.
out there for you entrepreneurs. Take advantage.
All right.
Excellent. Excellent. Here we grow again.
Exactly.
KAZ.
All right.
Bye-bye.